Well, hello and a very warm welcome to today's webinar, ReoCos in Italian NPL securitisations, review and outlook, brought to you by Scope Ratings. My name is Keith Mullin. It's my pleasure to be your moderator for today. As you'll hear in a moment, ReoCo structures in the Italian NPL market have been revitalised to some extent. So we've convened this session to bring you up to date with developments and to outline the advantages as we see them of using ReoCos. The backstory is that Italian NPL ABS typically have long recovery procedures, and ReoCo products can shorten recovery timings and increase recovery amounts. Even so, activity is still limited, but we'll discuss why we believe the structure has potential. So to do that, I'm delighted to be joined by Rossella Ghidoni and Leonardo Scavo from Scope's Structured Finance team. In a moment, they'll take you through a presentation, and after that, we'll be delighted to take your questions. So please do type these into the questions tab as we go along. And just a final note before we start, the team did publish a research note on this topic on the 25th of July, which you can find on the Scope Ratings website. But the note will be available today for download at the end of the session. So that's it from me. Rossella, Leonardo, great to see you. Let me hand the floor over to you.
Thank you, Keith. So thanks for joining this webinar today on the ReoCo, as Keith just explained. I think that to start, I would like to give you some, let's say, high-level background information on the ReoCos before describing, let's say, how we assessed their performance so far. So ReoCos are real estate-owned companies. So they are structures designed to enhance the value of the assets and the noteholders' profits in the context of NPL securitisations. What ReoCos do is that they participate in auctions, they bid for assets, and at the end, the assets are either sold to, let's say, third parties, or they are acquired by the ReoCo themselves, in case no other parties show up at the auctions, or in case the ReoCo are those ones proposing, let's say, the highest bids. Ultimately, the aim of these structures is to be able to resell the assets in the open market at a higher exit value versus the price at which they acquired the assets in the context of the auctions. So let's say what we call the award price of the asset. Now, as Keith just mentioned, ReoCo activity in the Italian NPL market has been limited so far. The first ReoCos were introduced back in 2018, and let's say the applicable law then evolved subsequently, facilitating, let's say, their further development. Currently, we rate 47 Italian NPL securitizations, and 7 of them envisage the usage of ReoCo structures. Some of them envisage these structures already at closing. Other ones basically saw their activations later on, as permitted by the relevant legal documentation. In any case, as we explained in our report, so far only 4 ReoCos out of the 7 that I just mentioned have been active, namely that they have already acquired some assets in the NPL market. As of May 2023, ReoCos have awarded 131 properties for an average price of 31 million, equal to their minimum bid. So this is, let's say, the overall background on the ReoCos. Now, in this slide, we show a couple of interesting charts, I think. The first chart on the left shows the average bid by ReoCos and the average award price split per year of activity. what we can notice is that for the assets awarded by the ReoCos, the award price is more or less equal to the minimum bid price, which ultimately mean that when ReoCos bid for assets, they generally directly acquired them. Namely that for these specific assets, there's a very low competition in a way. While for the assets that were awarded by third parties, as we can see, the award prices were higher versus the minimum bid prices. In particular, what we noted is that the assets awarded by third parties were sold 21% higher than the minimum bid. So it means that, let's say, the ReoCo intervention in this case contributed to increase the ultimate award price of the assets, or the sale price, let's say, by the third parties. If we instead focus our attention on the other chart on the right, what we can notice is that it shows that, first of all, most of the assets were awarded by ReoCos, while 36% were sold to third parties. And when the ReoCo awarded the assets, in most of the cases, it was through the debt assumption and not through cash payment. So here we must clarify a little bit what it means, these two different type of acquisition. So the debt assumption is the typical route that ReoCo follows to pay for an asset. So basically, if the court accepts the debt assumption, the ReoCo reaches an agreement with the issuer to pay the purchase price of the asset upon resale of it, and not, let's say, at the time of its acquisition. And this happens net of any deposit that is paid by the ReoCo to participate to the auction. So basically, the ReoCo assumes the corresponding portion of debt owed by the original debtor to the issuer in this case. Now, if instead, but as the data showed, this is, let's say, a more rare case, if the debt assumption is denied by the court, then the ReoCo has to pay in cash, and that's why we talk about, let's say, cash payment. And in this case, the ReoCo basically draws funds from its cash reserve or from other accounts available to its waterfall, or let's say from external financings. So let's move on. Here we present, let's say, other interesting charts from different perspective on how the ReoCos intervene and, let's say, which assets were ultimately acquired by the ReoCos. So the first chart on the left shows with the red color that ReoCos did mainly intervene, so did bid in auctions, mainly for residential assets, 78% of the cases. Then commercial for 17% of the cases, while industrial and, let's say, other type of assets represented a smaller share, namely 5% of the interventions. At the same time, ReoCos did mostly intervene for assets located in the north of Italy. This is what the chart on the right shows to us. In particular, 50% of the assets were residential located in Lombardy. So that's, let's say, the dark blue area on the map. While the chart in the middle shows us that most of the assets acquired by ReoCos were, again, residential. So not only the ReoCos mainly intervened on resi assets, but it also acquired mainly resi assets. And the peak of the activity as shown by the histogram, was, let's say, registered in 2021 as, let's say, the backlog of the suspended auctions due to the pandemic in the previous year recovered, but also as, let's say, from a structural perspective, some new ReoCos were introduced in transactions in those years. I would leave Leonardo to comment on this slide.
Thank you, Rossella. I will give you now some details on the performance of the ReoCo so far. So across the transaction we have analyzed, I want to first focus on only on the portion of assets that are acquired by the ReoCo but are not sold yet. First of all, in terms of timing, we have seen that ReoCo expect to sell the assets they have acquired in auction in less than 3 years. And these assets were acquired on average 18 months ago. As far as concerned instead the resale price, ReoCos services ReoCos are planning to sell these assets at a premium. The average premium that we are observing is around 63% higher than the price paid at auction. And these forecasts are available in the ReoCo business plan. If we, for example, look at background by property type, we see that residential assets, for example, that are, as Rossella said, are the biggest portion of the assets that ReoCo have acquired so far, are expected to be sold a little bit faster than commercial, for example, but at a lower premium. The premium, of course, is a function of the status, the complexity of the asset, the liquidity condition of the market, and all these things are detailed in the analytical business plan prepared by the ReoCo servicers and then ultimately approved by junior note holders. If we focus on the chart on the left instead, where we have the breakdown by say the sales stage of the properties, we know that we see that more than 2/3 of the awarded assets are already in a marketing phase. Being in a marketing phase means that a broker is already mandated, so is already appointed to sell an asset. So some marketing advertising activities has already started. So are underway. There is a small portion of assets that are flagged, are classified as partially sold. It means is the case, for example, of the residential complex where we have only some apartments belonging to the same building that were sold, while other are still on the market. There is another 10% that are classified as no marketing. No marketing is, for example, the case of assets that are not fully repossessed by the ReoCo, because, for example, the property title has not been obtained, or because the eviction activity has not completed yet, or other cases, for example, the asset is legally rented, and so the rent is passed to the ReoCo itself. The remaining portion, 11%, are assets that were already sold. That it's the topic of the next slide. So here we have put some information, some performance data on the assets that are acquired by the ReoCo and already sold to the market. I would say that the performance overall has been a little bit disappointing in terms of value. As what we have seen is that the net proceeds from the sale of the assets were below to the price paid at auction. To give you some more details on the numbers, assets were sold at an average discount of 58% below the auction, the award price paid in auction. Commercial properties that are anyway a smaller sample of the assets were sold slightly better with a discount that is approaching around 50%. We have calculated that this gap between the exit values from the ReoCo activity and the price paid in auction corresponds to between 2 and 3 deserted auction, Or to say in other words, if we had other 3 auction and assuming a 25% flat discount across auction, we would achieve the same result that we have observing now. However, the story is completely different if we look at the timing from a timing perspective. ReoCos were generally able to sell the asset much faster than what they expected in their ReoCos business plan. We are talking about 7 to 10 months faster than expectation. I would say is even much faster if we consider than the case, for example, where we should wait 2 3 auction more to sell the asset based on what we've seen for the average judicial timing of the Italian courts. Just a sentence instead of on the fees and expenses borne by the ReoCo, they ranged between 7 to 18% of the award price, and what we've seen is that they are in line with service expectation. Let's say in this slide we put the upside and the risk of using a ReoCo. To draw a conclusion, I would say that the ReoCo has successfully contributed to stimulate a participation of third-party in auction. As Rossella was showing in the first part of the presentation, they have helped to bidding up the sale price, as we have seen. The price paid by third parties in auction were on average above the minimum bid, which is quite positive for NPL transaction, for the transaction overall. We think there could be other upside for NPL transaction thanks to the ReoCo participation in case they repossess the asset, so they will avoid to have a new auction at a lower price, and eventually they can make a profit from the resale of the asset. So far, we have seen no profit from this resale activity, but it's also true that we have a limited number of assets sold so far. So our conclusion, our takeout can change quickly in the near future as new sales start to build up or new ReoCos join the market. This concludes the presentation, Keith.
Great. Thank you very much for those comments, Rossella and Leonardo. So we are now open for questions. So please do type your questions into the tab and we'll hopefully be able to answer them. I've got a couple of questions already. So can I stay with you, Leonardo? Can you give some examples of assets that were sold below their award prices? And I guess the key question is, why did the ReoCo sell assets below the award price? Was it just simply because there were no other options?
Yeah, so we start answering the first part. So since we have a limited short of sold, as a restricted sample of sold asset, we were able to see in details and understand which were the driver. We want to understand which were the driver that lead to this output. Generally speaking, I would say that the ReoCo selling strategies are well detailed in their business plan and are based, for example, on information available on CTUs. Anyway, there could be some cases where relevant new information arises only once the ReoCo repossessed an asset and have direct access to the asset. It's the case, for example, what we've seen are assets under construction where, for example, some construction costs increase more than expected, and the best strategy for the service at that point was to sell the property as it was, so unfinished, instead of completing the property and selling it back to the market. Of course, at higher discount, but faster than the second option. There could be other cases. What we've seen is there are some unexpected events that arises at a later stage and ultimately undermine the value of the assets. Is the case, for example, we've seen new litigation arising or legal permission from the relevant city authority that were missing or need to be renewed. These are the cases where for which the price is so low at the end. As a second option for ReoCos, we have also, the ReoCo can rent the asset instead of selling it to the market. But when we talk about unfinished properties, selling is not a feasible strategy. And for completed properties, instead, opting for a renting will delay a little bit the recoveries, of course, and expose also the ReoCos to more ongoing costs because the asset is still owned by the ReoCo. So renting an asset should be carefully assessed by the servicer. Generally is not a preferred solution compared to a strict sale into the market.
Maybe just, sorry, to complement a little bit, another point is about the macro economic factors that play a role, because, for example, as Leonardo was explaining regarding unfinished assets, the increase of the construction cost, might play a role. The increase of, let's say, electricity and those sort of things for finished assets might play a role too. So there are also, let's say, some components cost-wise that might increase due more to macro, let's say, features rather than unexpected events. And also these factors clearly can play a role. So in a way, I think that there is really a high number of different cases that might lead ReoCos to sell below the award price, as Leonardo was explaining before.
Yeah. Okay, no, that makes sense. And Rossella, staying with you, the presentation showed quite a stark difference between residential and commercial assets. Do you expect ReoCos to continue targeting residential assets mainly?
Let's say that first, as I just explained, ReoCos did mainly intervene on residential, but did also mainly acquire residential assets. And the second biggest category, as we saw before, was represented by the commercial assets. Now, we expect that this trend will continue over time. And let's say, among the reasons, there's probably the fact that for the ReoCos is easier to intervene on these two, let's say, type of assets, residential and commercial. Also, let's say, with CapEx and OpEx. While, let's say, for industrial assets, the situation is typically more complicated. These assets are more difficult to be managed and sold. Sometimes they are also more specific to certain, let's say, activities and production types. So in a way, they are less convertible than other type of residential or commercial assets. So we think that let's say the current activity is somehow a reflection of how easy and how much feasible is to then resell the assets, because clearly the ReoCo must be sure that once it acquires an asset, is also able to sell it in a reasonable time span, because otherwise it will simply increase its real estate risk. At the same time, I think that we can also argue that in any case, the activity so far of the ReoCos in terms of assets is quite aligned with, let's say, the average composition of the portfolios, because I think that a couple of years ago, we also published a report on that, on the emerging trends on the NPL securitisations, but basically overall most of the assets securing the Italian NPL portfolios are still residential, commercial, and only after that we see industrial and other type of assets. So I think that let's say the activity so far reflects both these factors, the structural average composition of the portfolios, but also clearly the feasibility of the repossession and the likelihood to resell the assets from the ReoCo perspective.
Yeah. Yes, indeed, absolutely. Thanks for that. Now, Leonardo, there are some risks to ReoCos, high costs, and perhaps a bigger risk, which is related to the real estate market itself. Has the market developed any sort of mitigants, any mitigating factors to soften the risks posed by ReoCo operations?
Yeah, well, yeah, you're right. I mean, we have identified two main risks, as you said, the high ongoing cost and the condition of the real estate market that can have an impact on the ReoCo activity. I will start saying that this risk cannot be neutralized completely. The mitigants that we have seen so far, let's say, in what we have analyzed, are more from a structural perspective. So the transaction, they put in place some measures, some structural measures that reduce a little bit this risk. I'm thinking, for example, at the use of expenses reserve, liquidity lines, external financing that can be used, can step into the structure in case there is a shortfall of money to cover some costs, for example. Or there is the presence of what we call the cross-collateralization mechanism. It means that we can, I mean, the ReoCo can compensate the loss from occurred on an asset with the profit obtained on another asset. So you compensate this in this way. I'm thinking of the structural the structural mitigants. We have the usually what we've seen in all the structure is like a presence of a threshold on the maximum exposure that a ReoCo can hold for a limited period of time on a rolling basis. And this helps a little bit, gives some comfort for the exposure that ReoCo can have in its activity. Or still, I'm thinking also the structure of the ReoCo fees, because the ReoCo needs to be remunerated in some way, and the structure of the fees is created in a way to incentivize to sell an asset within the projection of the ReoCo business plan. There could be, for example, some cases where the ReoCo are not even paid in case an asset is sold with a material delay. So I think all these structural mitigants can help to reduce the risk that we have identified so far.
Yes, indeed. Thanks. Rossella, I've got a question about exit values. Will current exit values materialize in a short to medium term? And if so, how can ReoCos add value to securitisations?
I think that's an interesting question, especially in light of the figures that we just shown, and let's say in light of what Leonardo just explained about, the average exit values and their discounts. In a way, you could say that this is, the $1 million question. But in any case, so what I think that there are 2 points. So first of all, the current figures that Leonardo just explained are very weak. So let's say they point out at very heavy discounts on the award prices. But as we already highlighted, the sample of the sold assets is in any case limited, and the number of the, let's say, interested transactions, so 4 out of 47, as we just mentioned, is limited too. So what we are saying, and we probably just already said, is that the evolution of the performance of ReoCos might materially change over time as long as its activity increases. So currently, as I said, the ReoCos just awarded about 100 plus properties. So clearly we expect this figure to, let's say, materially increase over time. And that's why we continuously monitor ReoCo's performance, because this is quite important. At the same time, so in a nutshell, what I'm saying is that the reality, as Leonardo just explained, is that so far timing was relatively good. So ReoCos sold assets faster than expected in their business plans, but the profitability was very disappointing. But the sample is too limited now to draw, let's say, robust conclusions in the medium term. At the same time, as also Keith, you introduced at the beginning, we still expect ReoCos to have some potential, so to add potential value to securitisations. And this is also linked to the history, let's say, of the NPL market and the legal framework that we have, because as we just mentioned, the average recovery time for legal proceedings is quite high here in Italy due to the legal framework, while we know that in other jurisdictions, securitization issuers are instead allowed to directly repossess properties and sell them in the open market. But this option doesn't exist in Italy. So that's why ReoCos were introduced. And let's say that's why the legal related framework developed since then. So as a result, let's say ReoCos were introduced to, let's say, compensate for these risks, timing, let's say too long a time, and recoveries. So we expect that as long as the performance will continue and we will monitor it, we still expect that, you know, profitability figures potentially might improve versus the current figures that we just show.
Right, no, indeed. Thanks for that. And Leonardo, I guess the question now is extension of the previous question, talking about costs. So what costs actually do ReoCos bear? And can you give some details?
Yes, in terms of cost, usually what we do, I mean, in our analysis also, is distinguish between what we call the real estate related cost, and then we have another category that is the ReoCo servicing cost. These are, let's say, the two main categories of cost that we have in this type of structure. And this cost, especially the real estate costs, can be ongoing or just paid one-off. I think about among the ongoing costs, we have the majority are taxes, for example, such as the municipality property tax, IMU in Italy. We have insurance costs to be paid, other operative expenses related to the property maintenance, for example. These are the type of real estate costs that the ReoCos are facing. That are all ongoing. If we think about instead costs that are one-off, paid only once in a life, we have some capex that could be environmental capex or regulatory capex according to the status of the asset that the ReoCo have acquired, or even general refurbishment of the assets or completion of the asset if they are unfinished, not yet finished. And then we have the brokerage fees. As I said, most of the assets are under a brokerage mandate, so also the ReoCo needs to remunerate them for the activity. On top of them, we have the second category are the ReoCo servicing fees, so the remuneration of the ReoCos because of these activities, and we have various fees also in this category. We have, for example, the asset management fees. We have the incentive fees if they sell ahead or the better price than what expected. We have fees pre and post auction fees, so fees for the ReoCo to join because they have to borne some costs also to join the auction, participate in auction, and so on. So from our analysis, say that the ongoing costs are those that have more weight on, I mean, they have more an impact on the activity of the ReoCo because they are depending on time. In the moment the ReoCos take more time to sell the asset, this cost increase as well. So is crucial for the ReoCo to assess better the business plan, which is the expected time frame for the assets, so in a way to calibrate also the actual cost to be paid by the ReoCo itself.
Yes, indeed. Thanks for that. Now, Rossella, through the session, there's been we talked about ReoCo performance. The question is, can you quickly summarize the metrics you use to assess ReoCo performance?
Yes, I think that let's say we almost already cover these points. So as Leonardo just explained before, to assess basically the ReoCos performance, we typically look at the cost side. So what we call, let's say, the cost ratio, so which is the ratio between the real cost in which the ReoCos incurred versus also their expected cost, but also in relation with the award price of the asset and the exit price of the asset. We also looked at the discount on the award price. So ultimately, which was, let's say, the comparison between the exit price, so the price at which the ReoCo was able to resell the asset, and the award price, so the price at which the ReoCo was able to acquire the asset. We also look, let's say, at the timing component. So how fast was the ReoCo in selling the asset, and if, let's say, it sold the asset faster versus what expected in its own business plan. So all these metrics are analyzed. Clearly, sometimes the quality of the reporting might vary depending on the servicer, on the transaction. So sometimes we are able to, let's say, derive more information on the type of cost from the reporting, or on the intrinsic characteristics of the assets from the reporting. Sometimes no. But overall, let's say, I would say that these are the major metrics. Clearly, what we just show in the previous slide was the comparison between the actual performance of the ReoCos and the business plan crafted by the ReoCos. And this is, let's say, something different versus the comparison between the exit prices and the business plans crafted in relation to the securitization of the transaction. So I think it's also important to furtherly clarify this point and distinguish between the two types of performances.
Yeah. Okay, thanks very much. But there is one question that's come in, and so to our questioner, that we will actually circle back to you one-on-one with this question rather than answer it today, if that's okay. So we just need to check a couple of things, but we'll get back to you. So Rossella, Leonardo, I have no more questions at this point. And so unless there are any last minute urgent questions, we should perhaps close the session. And so I'd like to thank all of you viewers for dialing in and watching the session. I hope you found that useful. If you do have any follow-up questions, feel free, please do actually get in touch with us, and we'll be more than happy to assist and respond to any queries you might have. These are sessions that we do on a regular basis as a service to the market, so we will continue doing them. So look out for our next topics. Obviously, NPL securitization is a core strength of Scope Ratings, so we do a lot on this topic. So look out for more stuff. Rossella, thanks. Leonardo, thanks so much. I did say at the beginning, you can actually download the research note that we published earlier this year in July. If you go to the apps button and click on that, you'll see you can download the PDF of our ReoCo research note. And we will make the presentation, I got a question about that as well, we'll make the presentation available too, which we'll circle back after the session. And one final thing, we have recorded this session and it will be available as a replay link on YouTube, which again, we'll generate that and circulate it afterwards in case you wanted to watch it again, or if in case you wanted to share it with colleagues. So that's it from us. I wish you a very successful rest of the afternoon, and it's goodbye from us.
Many thanks to all of you.
Thank you. Bye.
Bye.